Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Wednesday 11th of March, looking at gold, which has engaged in that little minor bout of profit taking again. We saw that spike up to 1702, unwound back to 1640, so that's 1642 actually. So that's $60 of corrective move in pretty much to the tick, 23.6% fib of the run higher from November to March. And there is still this sort of look to it whereby you've seen the momentum indicators just rolling over again. We've seen that through MACD, we've seen stochastics with a negative cross. Although what I would say is similar to the one that we saw early Feb, where you only saw a couple of days, maybe 3 days of corrective move before you started to see that reaction back higher again. So we've already seen $60 of unwind. And the market's found support at that 23.6% fib level. Now, that is interesting because we've just started to just generate a basis of support around that level. Now, can this now start to be a move that generates upside momentum again? Well, we need to see the market probably trading, well, certainly above 1667. I'll stick the crosshair on that because, well, I took the 1660 as the neckline of this top pattern. 1, 2, 3 to the downside, about $40 of downside target, which would suggest 1620. But I did say yesterday that anything that finds support around that 23.6% fib level would be a fairly encouraging sign from the bulls, and they have got that this morning, and they're holding on to those gains really around that 1661 mark, 1660, around that neckline. So how the market responds to this move, whether it has got further legs in a little downside shift or not, will depend, I think, on that 23.6% fib level, 1642. So we're still a little bit uncertain as to the near-term outlook, but finding support at that 23.6% fib level is encouraging, but not decisive yet, because you're still sort of edging a little bit more correctively on these momentum on the hourly. You'd want to see hourly RSI back decisively above 60. You'd want to see hourly MACD lines back decisively above neutral, and you've got a negative cross on those stochastics now. So it's just a little bit of uncertainty as to the near-term outlook, but we still continue to see an expectation that weakness is a chance to buy, and whilst that 23.6% level holds, then I think it's still a fairly encouraging look. But is that correction done yet or not? Not entirely convinced. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.